Hi, everybody. This is Gary Dean, and this is our nightly video report for Monday, March 6th, 2017. We saw a little bit of continuation with some selling pressure that we saw on Friday, even though it closed. It ended up closing up a point. It's the dynamics of this run that started really since President Trump was elected. It's changing, and it's running out of steam. And I think right now they're still in the frustration phase, and I'm leaving the door open that they may try and make a new high before we roll over. But my only reasoning for that particular view is because we don't have any bearish divergences that were in place when we made this high. But the fact that we've had so many other sets of bearish divergences, there's going to come one that doesn't go up and make the new high and heads down, and it's going to trap people. Now, the one thing that I really believe is going to be playing out is that when we do get that drop, there's going to be too many people that are long this market and not enough people that are short, and that's what's going to cause the acceleration to the downside. So you can see that we saw some buyers stepping in right near the 50-day moving average on the hourly chart here. If they close below it and we get a good close, then we're going to get a quick drift down to the 23.27 level. Now that's the 23% retracement, and it's also the 200-day moving average. The fact that we've been closing outside of this the regression channel, it's telling us that things are very, very overextended, and typically we would see a move that comes down here or even down to the bottom of the channel here. But they may just kind of play games up here and then just take it all out at once. And really, my reasoning for that particular view is the fact that we've been closing above the regression channel on a daily chart, and this is just a longer term regression channel that we're at the top of. So this is actually looking for a move to come all the way down to these levels here, and if not lower. And this is kind of where my target is for when the selling actually picks up and we see some momentum to the downside. It's going to be all the way down at this 2188, and it could go all the way down to the 2086. And the reason for that is that this is where the previous wave 4 was. So that is a lot of times where we would get another wave 4 before heading higher. So right now, I'm leaving the door open that we could come up and make a new high to set up the bearish divergences. You can see that on a 60-minute chart. We're not even at the midline yet, actually. We're right around the 50%. So there's plenty of room to go before it's into the completely oversold levels. So we could chop around and bounce, but I still think before everything is said and done, they're probably going to bounce it, but end up coming down lower. So I'm still on the side that any kind of strength that they do give us, use it to short, and take some profits when you get gap downs or you see some weakness, but hold on to some of them and just trade that. So then if they pop it back up, great. You just take the money that you sold on profits and you reshort it again up at resistance. And eventually there's going to be one that's going to come down and it's not going to pop up and everyone's going to get caught by surprise. But right now, they're still in the lulling stages, meaning that people are buying the dips and are not that concerned. I was explaining this in the trading room that when we get these big drops, they come in phases. So the first phase is let's say the day traders, your ones that are trading futures, quick in and out, and usually by the end of the day they're out of everything. So they're buying the dips on that. They have to be the first ones to become wrong on a position, and then what happens is they'll start panicking after they're buying the dips. But then from there it goes to the swing traders, and your swing trader may not even be concerned about any kind of drops until, let's say, the 23.27 gets taken out. So they'll just hang on to this because they're swing trading. They're not looking to get in and out. But once that gets taken out, now you get the swing traders and you have the day traders that are just on the wrong side, And then when we start getting down into areas that nobody was really even anticipating, we start hearing targets of, 1,000 on the S&P or 2,000, whatever it is, but a lot lower than what the current levels are. And then you get your long-term traders that start getting freaked out because they're starting to read about a bear market, and they panic. And that's what gives you these panic lows. And from there, this is the cycle gets recycled again, and we head back up again. And you have the day traders that are going to be shorting the whole way up because they were trained to short. Then they get washed out. Then you get your swing traders that once it goes above a certain level, they're going to jump long. And then you're going to get, last but least, your long-term traders that are going to say, okay, it's not coming back down, and they jump back in, and then the cycle starts back to the downside. And it goes in, shorter and longer-term phases, but that's pretty much what plays out. So I'll make a long story short, if I can really do that, is we're very, very closer to the end, and we are the end of this run from November than we are beginning of a new breakout. I think that it could be within, it could start to the downside any day and make perfect sense. I'm giving it, we have the Fed meeting next week. I think that's going to cause some volatility. Maybe they give us a spike up before, after it to make people believe that it was good if they raise rates. But after that's all said and done, I do believe that you're going to get some selling, and nobody's really going to see it coming. And when that happens, typically we see very, very big moves to the downside. And like I said, I think it's a lot closer than some people think. So if you short rallies and then you have some profits and you take some, always leave a little bit of the position open just in case, the next day they continue to, head down on it. But if they head up, then you just look to buy that position back. So with that, let's, see what plays out tomorrow. Really what the bears have to do is get it through this 2360. That's going to get us down to the, probably down to the 2337. Bulls, they need to jump above this 2386. That will give them some room to test up here. But like I said, I'm open-minded for tomorrow as far as if they want to maybe try to bounce it or if they head lower. It doesn't, I don't have really that strong of opinion because we don't have any solid bullish divergences in place, but we just came off of the oversold levels. So they may try to rally it, maybe close some of these gaps. But like I said, I think shorting rallies moving forward is going to be the trade that you want to be in. So with that, have a great night, and I'll talk to you guys tomorrow.